Pre-market 5:57 a.m. Pacific Standard Time. Today's date is 3/29/2012. Google. We have covered it forever, and we have done very well with it, particularly when we came down over here 1 month ago and dipped below that 600 level. And once it got back above that 600 level, that we would continue to go higher up to my 670 level, where I shorted the name right there. And we took that whole move there. And once again, all of those live trades, these are huge money moves, and they're overnight ones. Now, the thing about it is here, and we unloaded it and we went short. But when it dipped down here, and I said when it gets above the 600 level, which it did, meaning that if you didn't get the market maker ownership here, you definitely could have got the investment ownership at 600 and higher. And so far, 3 weeks in a row, we are just monster breakouts to the resistance levels of our original short sell off of that big long sell back in 2011 when no one wanted to own Google. No one. No one wanted to own it down here, and we did all the way to the top, and we got all the way back to the bottom. And this is a weekly chart, and I can tell you that the weekly 3-week breakout has worked, and every dip they've been running it up because they report earnings April 19th. Now you can double check that. However, is why do I want to be over here and buying at support levels and understanding my MMT that we will know that 660 right here is part of that wick. There's also an area right here, 665, within the wick of that weekly wick reversal, and I shorted that thing. I was only 25 cents off the high. That was about as master as you can get. And it was. And now, back over here in the bull run, we're right up here. Now, it's going to have trading ranges and it's going to have support levels. When Google bounces on support, it's all about buying the dog that's underperformed. It's not bloated weekly stock at 95% overbought. No, it's only 66.11. Buying the dip and then taking it up to the upper end of these resistance levels and using these price areas within this reversal weekly wick will be your upper end of your challenge. And that will be the price challenges that it will face as it pushes up through here. But let us not forget that when it hits that bottom support level, you're bouncing like a rocket. And it has, on certain days, it likes to drop down $8 and then bounce like a rocket off of that support level. Now, granted that it will follow the broader market and the pullback, but there is a behavior, and where money would want to go in this bull run is it would want to find a home there and run it up like they did the ISRGs and, of course, the price lines, the Apples of the world, the Amazons of the world, and a whole bunch of other high beta stocks that are at all-time high beta 52-week highs. Well, this one's still underperforming. And when we bought it the first time, it was an underperforming asset, and we've done it several times. We're about $50 into the move from buying above the 600 level, and that is the gain. But once again, that did not happen in just a single day, but you can make just as much money making a market on the stock, going long and short, and we do have ways of doing that using mastership in weekly and monthly options that allow us the opportunity. And it's Thursday, and we're 29 minutes to the opening bell in pre-market, but I'm starting the day off and moving forward into the month of April. I am starting the day off with buying low at the support side with the call side and selling that rip. When they shake that bid down, maybe they shake it down 1 delta in our brain or a half, but it doesn't matter. It'll bounce off support, and if you're not making the engagement, it'll say goodbye and just keep right on going higher off of those support levels, as it will. We'll be doing and watching where the calls and some of these puts were making money yesterday. I have them all here. Okay? And we're watching up and out of the money. You know, that call yesterday, that's a 710 call. But you had to own them when the stock was down at 600. And you had to be holding them. That's what these kind of plays are. It's how you make the bigger coin, which is a great finance tool. So we're monitoring what the put side has been paying here in the last prints. These are all positive prints right here. But then what was the markdown on the net change percent? The call side at 650, 330 call was up 130% right here. And that's what I'm talking about in reference to buying at support level. You would be engaging with the call level at support when the stock bounces and you make great money. Not only that, and you buy 100 shares if your account, you know, MMTs do get buying power from us. So they have the buying power to take advantage of those 100 share $8 breakouts. Still make $800. When they shake it down $8, break it off of those lows, and you're getting your entries, you do well. A lot of people can't adapt to it. Some can, some can't. However, understanding where the bull is, I mean, you know, who cares what other people can do? It's what we're doing right now. Their ability to not be able to perform with it is because of lack of training. Lack of training and lack of execution. And a whole bunch of other stuff that they're not aware of. However, Google, you will be looking at the weighted 640 call, 330 weekly options expiration Friday tomorrow. You'll be looking at other various components such as Google top end resistance levels, and I'm going to show you it won't be the 650 put now. It's going to be the 660 put. That is the resistance level that Google has to clear. Google has gone up into our resistance levels yesterday and buying off of the low end of support and selling at that top end of resistance is what is proven to work. And that the opportunity at both levels of price action, bull support, and overbought levels, and then how it will follow the market. Now, when they drop that bid down, I'm going to see it's 655.76. It's a narrow range gap down right now. However, there's 24 minutes left to go. And the type of ranges that we're going to be looking for is its normal mathematical formula range that it's displayed in a 15-day trading cycle. That means 5 days, 5 days, and 5 days. 5 times 3 equal 3 weeks, but 15 actual trading days in that upward bull cycle that we caught there at that bottom for certain people that know how to hold them at certain wholesale levels in certain kinds of bull markets. But nonetheless, the trading ranges, so we're going to see if this thing could break down. We'd love for it to break down to around 646.75. We would love that because then it would really bounce like a rocket. but we'll be watching the different support levels. We'll be watching various different call structure levels. We have a 640 call that expires tomorrow. Beautiful move, up $7.20. What a smoker that was. What a smoker that was. But let us not forget, they took $7.20 out of that 660 put. But there were trades intraday yesterday. This had a $4 range. So when Google hits intraday resistances for that matter and wants to pull back, there's a little value here that you can get. But the overall big runner is here. And these expire on a weekly tomorrow. So here's a special preview for all of my MMTs moving forward as we close out March. And one of the best bull rallies with the underperforming stock that still has to deliver on the earnings side. But we have 3 weeks before they report their April quarter. And we're going to look over the next 3 weeks as it's made a 3-week move going up into the earnings from the lower end of that trough of that last bear reversal that it had. And then the bull came back in and we took it and it's right back up here just like we've done before. And you have to have big winners like this and big winners like the price lines, the CRMs, and even the Badoos that made their highs the other day, and the Amazons. And right now, this is the one you want to focus on. And the ranges are going to be there. And you're also going to want to focus on the April call and put strategy, which is a monthly expiration, and what some of these look like. And how can I get some of these up and out of the money calls? But just remember, it's an April contract, and they report right at the expiration period in April. So, you would have to find these things would have to get marked down when Google pulled back. And the thing about it is they're just too high priced at $3. But nonetheless, we're looking at contracts that we had the 730 May right here. It's expensive now. It's way up here at the highs. But when you're buying down here at the $1.50 handle and you're getting 30 of them, you're selling into this move all the time. And it was a call that we've been doing for a long time, for a number of months. And the thing about it is when you had the last 3-week uptrend in the equity, the call down here at that low premium yield of $1.50, you have 100 of these for $15,000. You get a $4 move. You're making quite a bit of money. Or let's say you have 30 contracts and you're making $4. That's still in a 3-week period. That's $12,000 positive debits. Now, yes, they're expensive up here. I didn't say to buy. That didn't come out of my mouth. You had to be the buyer over here and a seller up here. Now, when they pull back on the dips, though, the May 730 call is what we'll be looking at, MMT. And I'm not going to give the price. I will give those strategies to my MMTs. But selling, you got to know when to sell them. And you have to sell them up here because this is where you want to unload them. So, but then they got to be bought back. So based on lots of scenarios in here before now and the earnings reporting session or earnings date, is that in the shorter term, up into that April movement, there's lots of strategies in here. Just remember that the premiums are overvalued on both the call side and even the put side is deflated, but the cost of that premium, yes, the premium's deflated in that sense. However, the premium cost, the dollar cost premium, is a different story. And that's where our expertise comes in because both sides have that other common denominator value, but the prices of the premium, well, both are overvalued. That's my conclusion moving forward on this wonderful day. And the wonderful thing about that May call. and buying it down here when the stock that was cheap and it was a great bull hedge on an underperforming asset. Let it be known. And yeah, you don't want to buy them up here. I never said that. You needed to be an owner down here, down in here, and selling into here, and then buying back on the dips here. So if we can get these things back at $2, who knows what comes our way as far as the trend goes. But once again, it's about the value of the underperforming asset within a bull range.